Welcome to the live trading session, everyone. I am Trading Core, and today we are trading Bank Nifty using our secret strategy that gives us 100 plus points. So without further ado, let's get started. Here you can see that the price opened flat. So let's wait for the price to give us a signal to take a trade. While we wait for a signal, let's talk about discipline and risk management and how to read price action. Unlike chart patterns or candlestick patterns, we are talking about what actually making the move like that and what's the meaning of this move. First, discipline. Discipline in trading is basically sticking to your plan, no matter what the market throws at you. It's like having a map and following it instead of wandering off because something shiny catches your eye. Without discipline, you might see a quick price move and jump in without thinking, only to get stuck in a bad trade. With it, you make decisions based on rules you set ahead of time, like I only enter trades that fit my setup and risk no more than 1% of my account. This keeps you safe and helps you win more over time. To build discipline, start small. Make a list of 5 simple rules, like trade only during the first 2 hours of the market open, or always set a stop loss before entering. Write them down where you can see them every day. Read them out loud before you start trading. It helps make them stick in your mind. If you break a rule, don't beat yourself up. Just note why it happened and try again the next day. Over time, doing this becomes a habit, like brushing your teeth. You don't think about it, you just do it. The key is repetition. One day at a time, one trade at a time. Think about it this way. Trading is like driving a car. Discipline is the rules of the road. Speed limits, stop signs. If you ignore them, you crash. If you follow them, you get where you're going safely. In trading, your crash is losing money on bad decisions. Your rules are your seatbelt and brakes. Simple as that. Now, let's talk about emotional control. Emotions are normal. They're how we react to things. In trading, they can be helpful or harmful. Fear might make you close a trade too early, missing a big win. Greed might make you take too big a position, turning a small loss into a big one. The goal is to notice the emotion when it shows up and not let it take over your decision. How do you do that? First, learn to spot them. Before every trade, ask yourself, am I feeling excited or scared right now? Rate it from 1 to 10. If it's high, pause and take a few deep breaths. Inhale for 4 counts, hold for 4, exhale for 4. This calms your body and gives your brain a moment to think clearly. It's like hitting a reset button. Another way is to reframe the emotion. If fear says this might go wrong, remind yourself, I've got a stop loss, so the worst is limited. Let's see what the price does. This turns fear from a boss to a passenger. Greed, say, a good trade is a planned trade, not a bigger one. Over time, these reframes become automatic. Practice on paper trades first. Feel the emotion, reframe it, see the outcome. You'll get better fast. Emotions come from our past experiences too. A big loss before might make you extra careful next time. That's okay if it leads to better rules, but not if it stops you from trading altogether. The trick is balance. Use emotions as signals, not dictators. If anger hits after a loss, step away for 10 minutes. Walk, stretch, or listen to music. Come back fresh. Simple steps like this keep you in control, not the market. Let's expand on that. Emotions are like weather. They come and go. You can't stop a storm, but you can prepare your house. In trading, your house is your plan. A strong plan. Clear rules. Good risk limits weathers. Emotional storms. When a loss hits and frustration builds, go back to your plan. What does it say to do now? Not, how do I get even? This shifts you from reaction to action. For greed, which is exciting but dangerous, set hard limits in your rules. Max position size is this. No matter how good it looks, log when greed shows up. After wins, during news, spot the pattern, and you'll see it coming. Control isn't suppressing feelings, it's directing them. Feel the excitement? Channel it into sticking to your exit plan, letting winners run. Feel the fear? Channel it into double-checking your stop. Emotions are energy. Use them wisely, and they fuel your success. Now, patience. Patience is waiting for the right moment, not sitting idle. In trading, it's the difference between jumping into a fake breakout and waiting for confirmation which saves you from losses and gets you into the real move. Patience is hard because the market moves fast and we want results now. But logically, rushing leads to more mistakes than waiting does. To build patience, start with small weights. When you spot a setup, count to 10 or wait one more candle before entering. This gives time to check if it's still valid. Over days, it becomes natural. Think of patience as investing time for bigger returns. A patient wait might miss a small 50-point move, but catch a 200-point one. The math favors it. Practice patience outside trading too. Delay checking your phone or emails build the muscle. In trading, set no trade zones, like no entries in the lunch hour when markets slow. Use that time to review charts or learn. Patience also helps with losses. Instead of forcing a recovery trade, wait for a good setup. That one patient decision can save your week. Let's go deeper. Patience is about trusting your process. If your setup has a 70% win rate, logically, 30% losses are normal. Patience lets you ride the wins. When impatience creeps in, ask, is this fear of missing out or is the setup really there? Most times, it's FOMO and waiting wins. Advanced. Track your patience. Here the price given us a entry signal. So we take entry here with stop loss of this and target of 30, 50, and 100 points. In a journal, weighted 2 candles, trade 1 plus own 150 points. Seeing the pattern motivates you to wait more. Patience ties to long-term thinking. Trading is a marathon, not a sprint. One bad day doesn't ruin you if you're patient for the next good one. Pros wait weeks for the right trade if needed. You can too. Start with 1 wait per day and watch your results improve. Journaling is your best friend for all this. It's writing down your trades, thoughts, and feelings to see patterns and improve. It's not busy work. It's how you get better. For discipline, journal. Did I follow my rules? Yes. No. Why not? This shows where you slip and how to fix it. For emotions, log. What did I feel before the trade? How did it affect my decision? Over time, you see fear made me exit early 5 times. Next time, check the chart, not my gut. For patience, note weighted X candles. Outcome, patterns emerge. Waiting 2+ candles equals 80% wins. Log risk 2. Planned 0.5% took 1%. Why? This keeps you honest. Make journaling simple. 5 minutes after each trade. Columns, setup, entry exit, PL, emotion, patience, wait, lesson learned, weekly, review 5 trades, what patterns, monthly, look at the big picture, win rate up, emotions down, adjust your plan. Journaling helps improvement by turning mistakes into lessons. See? Overtraded on Friday. Why? Expiry hype. Next Friday. Rule. Half size only. It's like a coach reviewing game tape. You spot weaknesses and strengthen them. Without it, you repeat errors. With it, you evolve. Let's expand. Journal, not just trades, but daily prep. Drew 3 levels. Bias up. Good. This builds confidence. For bad days, journal 3 losses. Common theme, no confirmation, close. Fix. Add close confirm to rules. Log wins 2. Held winner to target. Patience paid plus 200 points. This balances and motivates. Advanced journaling. Rate your day 110 on discipline, emotions, patience. Track trends. Discipline averaged 7/10 up from 5 last month. Use colors. Green for wins. Red for lessons. 2. Visual it. Share snippets in a group for feedback. Journaling is your mirror. Look often. Change what you see. Tying it all together. Discipline is your rules. Emotions, your feelings. Patience, your weights. Journaling, your mirror. They work as a team. Discipline sets the rules. Emotions test them. Patience lets them play out. Journaling improves the team. When a trade goes bad, discipline cuts it. Emotions stay calm. Patience waits for the next. Journaling learns from it. The cycle repeats, getting stronger. Logically, this team reduces mistakes and boosts wins. Motivation, you're the coach. Train your team, and they'll win the league. Start today. Write one rule. Feel one emotion. Wait one moment. Journal one thought. Small steps, big results. Let's continue expanding this exploration of trading psychology, keeping things straightforward and easy to follow with a focus on theoretical ideas explained through simple logical steps and hypothetical scenarios. We'll avoid any real-world stories or specific trade details, sticking instead to general theoretical frameworks, like how these concepts work in an abstract trading system, where decisions are like equations balancing inputs and outputs. We'll break it down slowly, repeating the main ideas for clarity, adding more layers of explanation, and showing how they connect, so you can picture applying them to your own setup. Think of your mind as a simple machine. Inputs are market signals. The machine, your thoughts, processes them, and outputs are your trades. Discipline, emotional control, patience, and journaling are the gears that keep the machine running smooth and efficient. If the gears jam like from unchecked feelings, the machine breaks down with losses. If they turn freely, it produces steady gains. We'll go deep into each gear, then how they mesh together, building a bigger picture step by step. Starting with discipline, the first gear. Discipline is the basic setting that keeps your machine on track. It's like a thermostat that holds the temperature steady, no matter if it's hot or cold outside. In a theoretical trading system, discipline is the rule that says, only turn the output dial when all input lights are green. Logically, if the machine runs without this setting, it might overheat too many trades or freeze no action at all, leading to unbalanced results. Imagine a hypothetical machine where the input is a signal like price bouncing off a line. Without discipline, the machine might turn the price hit our first target. Now, let's wait for other targets to get hit. Put a trade on every signal, even weak ones, causing the system to use up energy fast and shut down account drawdown. With discipline, it waits for 3 green lights, like signal plus confirmation plus risk check. So it only activates when the chance of good output is high. This logical step-by-step check turns into steady progress. To make discipline stronger in your theoretical machines, think of it as adding simple switches. Switch 1. Set clear if-then conditions. If input shows a strong bounce and risk is low, then output a trade. Otherwise, stay off. Repeat this idea. If-then rules are like traffic lights. Green means go. Red means stop, keeping the flow safe. Switch 2. Add a daily reset button. At the start of each run trading day, flip the switch to clean slate. No carryover from yesterday's run. This prevents one bad output from messing up the next. Switch 3. Build in a counter for turns. After 3 outputs trades, pause to check if the machine is overheating over trading. Logically, this counter balances activity with rest, avoiding burnout where the machine slows down from too much use. Let's repeat and add more on those switches to make it clear. Switch 1-1. S. If, then, is the heart. It's a simple equation. Input conditions equals output action. If the equation balances all parts match, the machine runs. If not, it idles. This keeps energy for high balance runs. Switch 2 to S. Reset is like clearing the memory after each day. Yesterday's unbalanced equation doesn't affect today's. Logically, without reset, old errors stack up, making the machine sluggish. Switch -3S counter is the safety valve. 3 turns on, 1 off. This logical rhythm lets the machine cool, so it performs better on the next run. Together, these switches turn a basic machine into a reliable one, where outputs trades are consistent and the system grows over time, expanding even more. Consider how discipline fits into a bigger theoretical machine called the trading cycle. The cycle has 4 parts: prepare, set rules, act, take trades, review, check what happened, adjust, tweak for next. Discipline is the thread that ties the cycle tight. Without it, the parts loosen and the cycle breaks. Logically, in a hypothetical cycle where prepare sets risk 1% max, act follows it. For a balanced trade, review notes followed, rule, good output, and adjust keeps it the same. The cycle spins smooth, producing steady energy profits. If discipline slips in at ignoring risk, review shows unbalanced output, loss, and adjust tries to fix. But without discipline, the fix doesn't stick. The cycle wobbles. Repeat the cycle logic. Discipline ties the parts. Loose ties, wobbly cycle, tight ties, steady spin. Subpart 1 of the cycle, prepare, is where discipline starts. Logically, spend 10-15 minutes listing 3-4 rules that fit your machine's style, like only act on bounces with a clear line below. This preparation is like oiling the gears before a run. It makes everything smoother. Subpart 2 Act is where discipline shines. This double check is a simple pause. 10 seconds to ask, does this fit? Logically, the pause prevents hasty turns that jam the machine. Subpart 3 Review is discipline's mirror. After each output, note, did I follow the rules? What was the input? Output good or bad? This mirror shows if the machine is running right. Subpart 4 Adjust is the fix. Based on the mirror, change one small thing, like add a volume check to prepare. Repeat. The cycle turns with discipline. Each part feeds the next, building a stronger machine. Let's add more detail to the prepare part, because it's the foundation. In prepare, logically, your rules should be few and clear. Too many, and the machine gets overloaded. Too few, and it runs wild. Aim for 4. 1 for when to act setup rules. 1 for how much to risk money rules. 1 for when to stop time rules. 1 for what to do after review rules. For the setup rule, think act only if price bounces off a line and the next bar closes in the bounce direction. This is simple. Line plus bounce plus close. For money, risk no more than 0.5%. Calculate size based on stop distance. For time, act only in the first 2 hours when moves are clear. For review, note input, action, output right after. Logically, these 4 cover the machine's main parts: input handling, output sizing, runtime, and cleanup. Repeat. Few clear rules equals smooth machine. Many vague equals jammed gears. For the act part, detail the double check. When input lights up, you see a bounce. Pause and list the rules in your head. Setup? Yes. Risk? Calculated. Time? Yes. Review ready? Yes. If any? No. Idle. This list is like a quick checklist. Takes 20 seconds. Saves hours of regret. Logically, the checklist is a filter. Good inputs pass. Bad ones get caught. Over 10 trades, it cuts bad ones by half. Sub-detail. If the pause feels hard at first, set a timer. 20 seconds max. This trains the brain to pause without thinking it's a big deal. Repeat. Double check in act equals half the bad outputs. Review part in more detail. After output trade ends, write 3 things. What input led to this? Did action follow rules? Output number, gain, loss. Then 1 feeling word. Calm or rushed. This is simple. 4 lines total. Logically, the 3 things show if the machine worked right. The feeling shows if your mind was clear. Over a week, read the 10-20 lines. See rushed equals loss 3 times. Or calm equals win 7 times. This pattern tells you what to fix. Subdetail. If writing feels like work, use voice notes on your phone. Talk it out. Listen later. It's easier and still works. Repeat. Reviews 3. Here we got stopped, while price is pulling back to the secret strategy level. So let's see if the price give us entry signal again. +1 equals clear machine tune-up. Adjust part detailed. From the week's reviews, pick 1 fix. Rushed losses from no pause. Add 20-second timer to act. Test the fix for the next week. Logically, 1 fix keeps it simple. No overload. If it works, wins up. Keep it. If not, drop and pick another. This is like tuning a bike, 1 wheel at a time. Sub-detail. At month's end, look at all fixes. Timer helped. Win rate up 10%. This big picture shows progress, keeping you motivated. Repeat. Adjust 1 at a time equals steady improvement. No overwhelm. Now, emotional control. The gear that keeps the machine from shaking apart emotions are feelings like excitement when price moves your way or worry when it dips. They're okay, but if they shake the machine, they cause bad turns. Trades control is noticing the shake and steadying it before it breaks something. Step 1. Spot the shake before turning output trade. Ask, am I steady or shaky? If shaky, name it. This is excitement because price looks good. Naming it makes it smaller, like labeling a box, so you can put it aside. Step 2. Steady with the breath in for 4, out for 4. 2. This slows your heart, clears your head. Logically, the breath is a reset. Shaky machine gets a quick oil change. Step 3. Remind. The plan is the boss. If excitement says take bigger size, the plan says stick to 0.5% risk. This puts the feeling in the passenger seat. Step 4. After the run trade, note the feeling. Excitement, but plan 1. Good. This teaches the machine to handle shakes better next time. Let's detail the spot. Step more. Feelings show up in your body. Fast heart for excitement. Tight chest for worry. Learn your signs. If fast heart, that's the signal. Excitement alert, then name it. Excitement from good chart. Naming is like putting a label on it. You see it as a thing, not the boss. Repeat. Spot plus name equals size it down. For the steady step, the breath is simple science. Slow breath tells your body no danger, calms the shake. Do it every time a feeling shows up, even small ones. Logically, regular breaths build a calm habit. The machine runs smoother overall. Sub-detail. If breath feels odd, try counting backward from 10 while breathing. Distracts the mind, steadies the body. Repeat. Breath is the quick fix. Use it. Feel the calm. Remind step in detail. The plan is your steady friend. When feeling says this is easy, go bigger. Open your rule list. Risk 0.5%. No exceptions. Read it slow. Logically, the list is proof. I've tested this. And here, the price did so. We take entry again with 30 points, stop loss, and target of 30, 50, and 100 points. It works. This quiets the feeling. Sub-detail. Keep the list short. 3-4 lines. So it's easy to read fast. Repeat. Plan is boss. Feeling is friend, not driver. Note step detailed. After. Right feeling. Name. How I handled. Breath plans. Outcome. Win-loss. This is 1 minute. Logically, the note shows handled excitement. 1. Do more or ignored plan. Lost. Do less. Patterns build fast. Sub-detail. If writing is hard, use bullet points, 1 per part. Repeat. Note the handle. Good handles make good habits. Let's add more on common feelings. Excitement after a win. Good. But it can make you chase the next. Steady with. 1 win doesn't change rules. Worry on a dip. Normal. But check. Is stop hit? No. Plan says hold. Anger on loss. Step away. Note anger from surprise. Plan. Had stop. I followed. This turns anger to. Okay, next. Repeat. Common feelings have common fixes. Spot. Steady. Remind. Note. Now. Patience. The gear that lets the machine run at the right speed. Not too fast. Not too slow. Patience is just waiting for the input to line up perfectly before turning output. Rushing turns bad inputs into bad outputs. Step 1. Define perfect lineup. For you, maybe bounce plus close confirm plus no news. Write it. Step 2. Practice short waits. See a bounce? Wait 1 bar. See if it confirms. Step 3. Use wait zones. In slow times, no outputs. Use for learning. Step 4. Track waits. Note, waited 1 bar, win or rushed, loss. See the pattern. Step 5. Reward waits. After a patient win, say, good job waiting. This makes brain like it. Detail the defined step. Your lineup is 2-3 things that make a good input. Keep it easy. Bounce offline, plus next bar closes up. This is your green light. Logically, green lights mean good runs. Red means skip. Repeat. Define green. Only green turns output. Practice step detailed. Start with 1 bar waits. Spot bounce. Watch the next bar. If it closes up, enter. If not, skip. Do this for 10 spots a day. Logically, the wait filters bad ones, keeping only good. Sub-detail. If 1 bar feels long, start with 30 seconds. Build up. Repeat. Practice short. Long comes easy. Wait zones detailed. Mark times on your chart. -9 a.m. prime. Act if green. 11:01 p.m. slow. No act. Use slow time for rule read or chart. Look back. Logically, zones match market speed. Fast zones for action. Slow for rest. Sub-detail. If zone slips. Note. Why? Bored. Add a fun task like reading a trading book. Repeat. Zones match speed. Smooth machine. Track step. In journal, add weight bars 1. Outcome, win. Weekly, count weighted 1 plus equals 70% wins. Rushed equals 40%. This shows weight value. Logically, numbers prove it. Brain believes numbers. Subdetail. If tracking hard, use a app counter. Tap for weight, see total. Repeat. Track to see to believe. Reward step. After patient win, small reward, like favorite song or break. Logically, reward links weight to good feeling. Brain wants more. Subdetail. No reward for rushed losses. Only positives reinforce. Repeat. Reward weight. Wait more. Common patient spots. Open excitement. Wait for close. Dip worry. Wait for bounce bar. Loss anger. Wait 30 mins. Each wait builds the gear. Motivation. Patience is your quiet power. Wait smart. Win big. You've waited for good things before. Wait for good trades. Get good results. Journaling. The gear that tunes the whole machine. It's writing down what you did, felt, and learned, so you see patterns and fix them. Step 1. Simple format. Date. Setup bounce. Entry stop target. Outcome plus points. Feeling calm. Weight bars. Lesson 1 sentence. Step 2. Right after each output. 2 minutes. Step 3. Weekly look. 5 entries. Ask what common wins when calm. Step 4. Fix one thing. Lessons show rushed losses. Add weight rule. Step 5. Monthly big look. Win rate up. Feelings down. Celebrate better this month. Detail format. Date today. Setup bounce at line. Entry 24020. Stop 23970. Target 24070. Outcome plus 50 points. Feeling calm. Weight 1 bar. Lesson volume was good. Keep that check. Logically, this format covers what, how, why. Next, repeat. Simple format equals easy journal equals better machine. Right step. After trade, pull up the format. Fill quick. If win, good. Note what made it good. If loss, okay. Note what to change. Logically, writing locks it in. Memory fades. Paper doesn't. Subdetail. If busy, voice note. Playback later. Repeat. Write quick. Fix fast. Weekly, look detailed. Sunday, read 5-10 entries. Group 3 wins with weight, 2 losses without. Weight helps. Or calm trades equals plus points. Rushed equals -9. 1 fix. From patterns, add calm. Check before act. Logically, weekly groups show weekly lessons. Subdetail. If no patterns, all calm wins. Keep calm. Repeat. Weekly group equals weekly growth. Fix step from weekly. Pick one easy change. Rush losses, add 1 bar weight, test next week. See in journal. Logically, 1 fix keeps it simple. 1 at a time builds big. Subdetail. If fix works, keep. If not, drop. Tried weight, still rushed, try 2 bars, repeat. Fix 1, grow steady. Monthly big look, end month. Read all. Count wins losses. 60% wins up from 50%. Feelings, less rushed, more calm. Celebrate win rate up. Good job. Logically, monthly shows big picture. Small fixes add up. Subdetail. If down, what coming? Too many trades. Cut to today. Repeat. Monthly big equals yearly big. Why journal overall? It turns, I think, to I know without you. Guess fixes with UC facts. It helps discipline broke rule 3 times. Why? Tired. Sleep earlier. Emotions. Worry trades lose more. Breathe more. Patience weighted. Trades win 80%. Wait more. Logically, journal is the machine's doctor. Checks health. Fixes problems. Repeat. Journal knows. Use it to win. Tie it all one more time with extra steps. A trade day morning. Read rules discipline. Risk 0.5%. Wait for close. Spot setup. Feel excitement emotion. Excited. Breathe to calm. Wait 1 bar patience. Confirm close. Yes. Enter. Trade dips. Worry hits emotion. Worry. Reframe stop safe. Hits target. Log journal win. Calm. Waited 1 lesson. Breathe worked. Slow day. No setup. Patience skips. Journal skipped. Too bad. Saved risk. Evening. Review 3 trades. 2 wins with calm. 1 loss rushed, add calm check. Weekly, group, calm plus weight equals 80% wins. Monthly, win rate 65%, up 10%. Keep going. This time makes the gears turn together. Discipline starts the day. Emotions get checked. Patience waits the good. Journal ends with lessons. The team works. Better team, better day. Logically, team practice makes perfect. Motivation. Your team is you. Train it daily. Win big. Next, risk management. How to size and protect. Risk management in trading is the simple art of protecting your money so you can stay in the game long enough to let your good trades add up. It's not about avoiding losses. That's impossible because every trade has a chance to go wrong. It's about making sure those losses are small and controlled while your wins can be bigger and let you grow your account over time. Think of it like driving a car. You can't avoid all bumps in the road, but you can wear a seatbelt, drive at a safe speed, and have good brakes to keep the ride smooth and get you to your destination without crashing. In trading, the road is the market's ups and downs, and risk management is your seatbelt, speed limit, and brakes. Without it, one bad bump can end your trip. With it, you handle the bumps and keep going. Let's break it down step by step, keeping it easy to follow. We'll start with why risk management is the foundation of everything else in trading. Then go into how to size your trades, set stops, use reward to risk ratios, diversify, and handle drawdowns. I'll repeat the main ideas so they sink in. Add simple explanations for each part, and show how they connect to your daily routine. By the end, you'll have a clear checklist to use before every trade, making risk management as natural as checking your phone. First, why is risk management so important? Logically, trading is a numbers game. Even the best setups win only 60–70% of the time. That means you lose 30–40%. If those losses are big, say 5% of your account each, a few bad trades can wipe you out. But if you keep losses small, 1% or less, you can survive 10–20 losses in a row and still have money left to trade. Your wins then pull you back up. Simple math. Suppose you risk 1% on a loss and win 2% on a win. With 60% wins over 100 trades, you lose 40 times 40% loss, but win 60 times 120% gain. Net plus 80%. Risk 5% per loss. Lose 40 times equals 200% loss. Win 60 times equals 300% gain. Net plus 100%. But one extra loss streak could end you. The logic is clear. Small risks let the math work for you. Big risks let luck decide. Repeat that. Risk management is the math protector. It keeps losses small so wins can grow the account. Without it, even a great strategy fails because one bad day ends everything. With it, you trade forever, compounding small gains into big money. Motivationally, it's your safety net. Trade with peace, knowing you can't lose it all in one go. Now, how to size your trades. The first simple tool in risk management. Sizing is deciding how much to bet on each trade based on how much you can afford to lose. The golden rule: never risk more than 1% of your total account on a single trade. If your account is 1,000 rupees, 1% is 1,000 rupees max loss per trade. Why? 1% logically, it lets you survive 100 bad trades in a row without going bust though. That's rare. Step 1. Calculate your account size, total money you can lose without stress. Step 2. Pick your max risk per trade. Start with 0.5 to 1. If new to be safe, step 3 for a trade. Decide your stop distance. How far price can go against you before you exit, say 50 points on Nifty. Step 4. Divide your risk amount by the stop distance to get position size for 1,000 rupees. Risk and 50-point stop size for 20 rupees per point. 1,000 rupees 50 equals 20 rupees. On Nifty, future 25 rupees per point standard. That's about 0.8 lots. Round down to safe. Let's detail that calculation more. Suppose your account is 5 lakhs alt. Risk 1% equals 5,000 rupees. Stop 100 points on Bank Nifty. Higher volume position size equals 5,000 rupees. 100 equals 50 rupees per point. Bank Nifty future is 15 rupees per point. So number of lots equals 50 rupees, 15 rupees 3.33. Take 3 lots, 45 rupees per point. Risk 4,500 rupees. Logically, always round down. Better under risk than over. Repeat. Size equals risk amount, stop distance. This keeps every trade the same risk, no matter the win size. What if stop distance changes? Adjust size. Bigger stop 200 points equals smaller size 5,000 rupees, 200 equals 25 rupees per point, 1.67 lots. Take 1. Smaller. Stop 25 points equals bigger size, 5,000 rupees 25 equals 200 rupees per point, 13 lots. Logically, this equalizes risk across trades. Big stop trade risks same as small. Substep. Always calculate before entering. Use as a calculator or app note. If math feels hard, use a free position size tool online, but double check. Motivation, sizing is your equalizer. It makes every trade fair, so you can focus on the setup, not the money. Small sizes build confidence. Win a few, feel the growth without fear. Over 50 trades, it turns steady. Next, stop losses. The brake pedal of risk management. A stop loss is your automatic exit if the trade goes wrong. Set at a price where the idea no longer makes sense. Logically, it's the if wrong, get out line. Protects from big losses. Step 1. Place it where the setup fails. For a bounce trade, below the bounce, low 10, 20 points away. Step 2. Use the size calculation above to match your risk percent. Step 3. Set it right when entering. Never move it wider. Step 4. If the trade goes your way, trail it, move up as price rises. Lock profits. Simple trail. Move to break even after 1 gain, then 10 points behind price. Detail the placement for a rejection setup wick at level. Stop beyond the wick end. Gives room for noise, but not much. Logically, too tight equals early stop. Too wide equals big loss. Test on paper. Place stops on 20 past trades. See how many hit versus run. Adjust distance to fit your market. Nifty 2050 points. Forex 2050 pips. Repeat. Stop equals failure point. Set it. Trust it. Trailing detailed. After trade moves 1 gain equals risk. Move stop to entry, break even. Now, risk O. If it moves another 1 R, trail 20 points behind high. Logically, this locks gains while letting winners run. Substep. Use alerts. Set move stop at 1. If it hits stop, you're out, even, or up. No regret. Why stops? Without. 1 bad trade wipes weeks of work. With. You live to trade again. Motivation. Stops are your guardian. Let them guard. And you sleep easy. Reward to risk ratio. RR. The accelerator. RR is how much you aim to win versus lose on a trade. Simple goal. ONIUS.WE or better. Risk 1 to win 2. Logically, even 50% wins with ONIUS.WE equals profit. 50 wins. X2 equals 150 losses. Zone equals 50. Net plus 50. Step 1. Set target as 2x stop distance. Stop 50 points. Target 100 points up. Step 2. Place target at logical spot, like next level or prior high. Step 3. If it hits target, take full or half. Let half trail for more. Step 4. If no target, use time. Exit after 2 hours if not moving. Detail R for 1. 3 target 3x. Stop higher reward but fewer hits. Logically match to style scalps. 1.5 swings 1-3 repeat. RR equals win big, lose small. Math your friend diversification. The safety net, don't put all in one trade or asset spread. Risk 6 equities. Nifty 24x. 20 commodities per trade. Max 2% across all. Logically, 1 bad Nifty day doesn't kill if Forex runs. Step 1. Limit open trades to 3. Step 2. Different assets know all Nifty. Step 3. Correlate low. Nifty up, crude down sometimes. Step 4. Rebalance monthly. Sell winners, buy dips. Detail spread in equities. Nifty plus stocks. Forex, EURO USD plus GBP commodities. Crude plus gold. Logically, spread reduces single point failure. Repeat. Diversify equals survive volume. Drawdowns. The dip. When account drops -5%, don't panic. Logically, normal in trading, even pros have 20% dips. Step 1. Pause trading. Review journal. Step 2. Cut risk to 0.25% until back up. Step 3. Focus paper trades. Step 4. Return with smaller sizes. Motivation. Drawdowns are rest. Come back stronger. Tie it all. Sizing plus stops plus RR plus diversify plus drawdown plan equals protected machine. Simple daily. Calculate size. Set stop target. Spread if multiple. Review dips. Motivation. Risk management is your shield. Trade bold behind it. Next, price action reading. How to read price action like a pro and use it to trade the market. Price action is the simplest way to understand the market. It's just watching how price moves on the chart through candles, seeing who's in control, buyers or sellers, and deciding when to trade. Based on that, no fancy tools, no complicated math, just reading the story. The price tells you as a pro, you treat the chart like a conversation. Buyers want price up, they see value. Sellers want it down, they see overvalue. Candles show the back and forth. We'll keep this super easy. Step first, read the candle. Step second, see the bigger pattern. Step 3, trade it with simple rules. By the end, you'll have a 3-step checklist to use on any chart. Nifty, Forex, crude, works everywhere. Let's go slow with easy examples you can picture. Step 1, read the candles. Who's winning the fight right now? A candle is one line in the conversation. 5 minutes, 15 minutes, whatever time frame. It has a body thick part and wicks thin lines top bottom. The body shows who won the line. Green body close higher than open equals buyers won, ending stronger. Red body equals sellers won, ending lower. Wicks show the fight. Upper wick equals sellers pushed back from a high try. Lower wick equals buyers pushed up from a low try. Simple rule. Green plus short wicks equals buyers in easy control. Red plus short wicks equals sellers in easy control. Long wick on top of green equals buyers tried high, sellers stopped it. Sellers getting strong. Long wick on bottom of red equals sellers tried low. Buyers stopped it. Buyers getting strong. Picture this. Suppose price starts the candle at 100 open. Buyers push to 105 high. Sellers pull to 102 close. Green body, upper wick. Buyers won the line, but sellers fought at the top. The market is saying buyers ahead, but sellers are pushing back. Watch if buyers keep going. If the close is 98 with low to 95 red body, lower wick, sellers won, but buyers fought at the bottom. Market says sellers leading, but buyers defending. Sellers might tire if buyers keep fighting. Pro tip, body size equals win strength. Big equals strong win. Small equals close fight. Wick length equals fight intensity. Long equals hard fight. Short equals easy win. Read 3-5 candles in a row to see if one side is getting louder. Step 2. See the bigger pattern. The story of the trend or range. One candle is one word. 5-10 candles are the sentence. The trend or range story. Look for the flow. Are closes higher overall uptrend? Buyers leading the story? Lower downtrend? Sellers leading? Or bouncing in a box range? Balanced talk, uptrend story. 5-7 green candles, closes higher each time. Short lower wicks, buyers defending lows. Market says buyers telling the story up. Sellers quiet or weak. Expect more up unless sellers interrupt big. Downtrend story. 5-7 red candles, closes lower. Short upper wick, sellers defending highs. Market says sellers leading down. Buyers weak. Down. Continues unless buyers fight back. Range story. Mixed green-red. Closes flat. Long wicks both ways back and forth. Market says even talk. No winner. Price stuck until one side breaks out with a big candle. Pro red. In an uptrend, look for pullbacks. 1-2 red candles in the greens. Buyers pausing, not turning. Long lower wick on pullback red equals buyers defending. Story up. If pullback turns to 3 reds, sellers interrupting. Story shifting down. Picture a theoretical uptrend. 6 greens closes higher. Short wicks, then 2 reds with long lower wicks. Buyers leading, sellers try, but buyers defend low. Story still up. Market is buyer's main voice. Sellers side comments. Up, but sellers trying. For range, 8 mixed candles bouncing between 100, 105. Long wicks at 100 and 105 equals both defending edges. Market is balance chat. Buyer-sellers agreeing on price here. Wait for one to push out with a close beyond the box. Repeat the pattern logic. Higher closes equals buyer story. Lower equals seller story. Flat with wicks equals balance story. Pullbacks in trend equals pause, not change. Defend wicks. Keep story going. Step 3. Trade it. Simple rules to enter, exit, and protect. Once you read the story, trade the next line. Pro trades are 3 things. Good spot story clear. Good entry wait for confirm. Good out risk small. Reward big. Risk 1% max per trade. Suppose 1 rupees L account lose 1,000 rupees max if wrong. Trade up trend story. Wait for pullback to low red 1-2 candles. Enter long above the pullback, high close buyers winning back. Stop below pullback. Low 10-20 points. Target 2x. Stop distance up. Risk 20 points. Target 40. If story shifts 3 reds, get out early. No fight. Trade down trend story. Wait for rally to high green 1-2. Enter short below. Rally low close sellers winning back. Stop above rally high. Target 2x. Stop down. Trade range story. Wait for breakout. Close beyond box. Big green above high or red below low. Enter in breakout direction. Stop inside box. Target box width and direction. Simple checklist before trade. 1. Story clear. Up down range. 2. Spot good. Pullback in trend or breakout in range. 3. Confirm. Close in direction. 4. Risk small. 1% max. Stop set. 5. Reward big. 2x. Stop at least. Pro tip, wait for the close. Don't enter on wicks fights that might flip. In up story pullback, wait for green. Close above, pull high. Logically, close equals end of line. Start of next. Safer. Picture theoretical uptrade. Story up. Pullback 2 reds to low. Third green closes above. Pull high. Enter long. Stop below. Pull low. Target 2x up. Market says buyers back in control. Up from here. For range breakout, box 100, 105. Big green closes 106. 106. Enter long. Stop 104 inside box. Target 111 box width up. Logically, breakout close equals story change. Ride it. Repeat trade logic. Good spot plus confirm close plus small risk plus big reward equals pro trade. Skip if any missing. Why this works. The simple logic behind reading and trading. Reading price action is like listening to a story. You see the flow who's leading, the fight's wicks, the wind's bodies, and guess the next part, trend, continue, or change. And finally, price hit are all 3 targets.